Thanks for listening to the BlockNation Crypto Podcast, the realest podcast in all crypto. I'm your host, Drew Griffin. In this episode, I interview Pactum Capital CEO Daniel Cawrey, and we discuss the Bitfinex exchange, how they lost $800 million, how it has a lot of similarities to Mt. Gox, what exchanges can do moving forward to keep their accounts secure, and what you should do as an investor to make sure you're paying close attention to your funds and how to protect your capital. I hope you enjoyed this episode. Please leave me your comments, your feedback. Make sure you subscribe to our channel and make sure you check me out at Drew Griffin. Thanks for listening. All right, thanks for listening to the BlockNation Crypto Podcast. I'm in with Daniel Cawrey. You there, Daniel?
Hi there.
Hey,
yeah,
what's
I
up,
am here.
man? We're going to cover Bitfinex and Mt. Gox. So you wrote an article, I think it was about a week ago, and put it on CoinDesk over the big Bitfinex tether thing.
I did, yes. There's a follow-up that came out today about what's the worst that could happen. And I also added Binance to the mix, which I know everybody loves.
That's a big deal right now, man. That was some some crazy shit that happened, and it happens every month. Some exchange screws up somewhere, and they lose investors' money, and it's unbelievable how it just keeps on happening. But fun times, right?
Yeah, I mean, I can talk to that to some degree. So I think that a lot of folks that are working in cryptocurrency are talented software developers, and they really have good intentions. But one of the things that is really lacking is an understanding of real, pure, like IT security mechanisms and just practices. And I can say from experience, like when I was studying information science in college, security wasn't really something that was ever really discussed. It wasn't until I started my professional career. I worked for an energy utility for several years, and my job was to work on a special network to protect the electrical grid and the gas system from being attacked. So it was like his own network within a network sort of thing. And later on, I went to Washington, D.C., and I was consulting on Google to cloud solutions for lots of different clients. In sort of the government diaspora, but I didn't know anything about security coming into any of that, and I think that a lot of cryptocurrency folks are sort of learning on the fly, and exchanges are learning on the fly, and so it's like a mix of a lack of real professional security experience. Plus, we're also dealing with a whole new paradigm of security, where we have to deal with storage of keys and keeping keys private, and you've got hot wallets, you've got cold wallets, you've got burner wallets, you've got multi-sig, you've got all these different things that are going on. It's exciting, but when you're an exchange and you're dealing with tens of millions to hundreds of millions of dollars, one false move can be tragic. And what generally happens is that hackers are just kind of waiting around the perimeter and kind of poking at that perimeter and looking at what they can do. And it looks like, while I don't have a full understanding of everything that happened with the Bitfinex hack, the Binance hack, it looks like they had, hackers had been kind of poking around the perimeter. They had found some holes to get in, and they made a big move. 40 million is a lot. I'm sure right now Binance is trying to figure out ways to not allow that to happen again, and figure out how to. Well, that sounds real basic, I know, but so like one of the things that they could do immediately that I'm sure that they're working on is, hey, like how do we throttle these types of transactions from happening? Because 40 million is a big number, and so their threshold, that just shows what their threshold for withdrawals has been, and that they're making a good amount of money on transaction fees, and their business model is good, so they can most certainly find folks to come in and help them figure out how to throttle that kind of transactional threshold from a withdrawal perspective.
So do Do you think exchanges are just not focusing enough on security? They're just putting too much time and effort in other parts of the business and putting security on the back end?
I wouldn't say that holistically, because there's a lot of good exchanges that don't seem to have this problem. I'm not saying that Binance is a bad exchange or any hacked exchange is a bad exchange. It's just that they need to devote more resources to security. And this goes back to my premise. It's just the focus on security just really hasn't been there in cryptocurrency. And I come into this industry quite lucky in that I have that background. And I know some of the folks that are my employees, they say I'm overly paranoid, but I don't think that's really the case. It's just the background that I come from.
Well, I mean, I think when it comes to holding other people's money, it's okay to be overly paranoid, because if you lose their funds, they're screwed. And unless you have some sort of insurance to back it up, there's just nothing you can do to return those funds to those people.
Right. Well, we want to always criticize the banks and how much they don't provide enough value, how expensive they are. But the reality is they are being just inundated by hackers, whether they are one guy sitting somewhere in Eastern Europe to state actors. So, and these aren't things they can talk about, because their whole goal is to provide trust. Mm-hmm. And I know your average cryptocurrency person or your average Bitcoin entrepreneur doesn't want to hear this, but there are things to learn from the finance industry, and hey, there are things not to learn from the finance industry. But I think, like, from an IT security perspective, there's a ton of things that can be brought over. And so one thing I wouldn't be surprised to see is a lot of folks that have worked in security ops for finance come over to the cryptocurrency industry. We need folks like that.
Yeah, it's needed, because like we were saying, every month there's a new exchange hack or some sort of scheme or something going on where investors are losing their money. And so we definitely need to get some more security in there and protect investor funds. Well,
as much as I want to see the regulators take a hands-off approach to innovations in blockchain and cryptocurrency, I still think that one of the things that they're trying to do, at least in the U.S., is make sure that funds are safeguarded. This idea of custody has been a really big deal here in the United States with regulators, because the regulators are just trying to give guidance to cryptocurrency entrepreneurs, because if that guidance isn't followed and you're hacked, that's when law enforcement gets involved. And then, if someone wasn't really providing their fiduciary duty to protect customer funds as they're supposed to, that's when there's some serious problems that come into play.
Yeah, I think with regulation, it needs to be a light touch, because you're right. We don't want the regulators to come in and just completely revamp all the laws on cryptos, but there does need to be, some sort of stuff in place to make sure, like you're saying, exchanges have enough security for their investors and customers.
And look, the regulators can take a light touch, because there's existing financial regulation on the books that law enforcement can already follow. And that's what they're going to do. Law enforcement is not going to take a light touch, because their job is to go after the bad guys and clean this all up. What will happen after the fact is that there will be all these court cases, there'll be all these investigations, and that's where precedent comes in. And that's when the regulators will say, hey, like, there are going to need to be some new rules, because this is like a new thing, and it doesn't behave like money as much as fiat does. Fiat is just a number in a database, where I would argue that cryptocurrency and blockchain technology is programmable store of value, programmable ways of transferring value across the internet. And so that's a totally different type of situation than what you have with, like, regulated US dollar or regulated euro or any other any other currency that's backed by a central bank.
Well, speaking of regulation, what were your thoughts on, was it Congressman Sherman that came out yesterday and wanted a complete ban on crypto?
So I haven't really looked into it, but this is probably coming from his constituents, whether they are from the finance industry, whether they are some people that are getting tied up in whatever's happening with Bitfinex Tether. There's a reason why he's doing, like, he didn't just wake up angry and say, hey, like, I'm going to do all, yeah. We've seen this a number of times. There was a gentleman in Congress from, I believe, West Virginia that had tried to do the same thing, and it turned out he was pretty involved with the banking industry or the banking lobby that had suggested, hey, maybe we should do something about this before it becomes a problem or becomes a problem for our industry, for the banking industry.
Oh, there's no doubt that's probably what's going on with him, because he even talked about that, how, he sees cryptos as an attack on the U.S. dollar and, the complete control the U.S. has over the global banking system. And he said it it's actually like the first 12 seconds. And I think personally, it's a violation of our freedom to make people choose, what assets we can and cannot contract, monetary transactions with. And I know you got to take steps because of illegal activities and terrorism and all that stuff. But I personally think it's attacking our freedoms and liberties as citizens of the United States and of this world.
Look, it isn't going to go anywhere. This stuff happens all the time. It's just posturing. Yeah. Okay, there's like bills that come along. There are members of Congress that come along and say these things. They rile up Twitter. It's one of the reasons why I didn't even really look too much into it. I saw it on Twitter and I kind of chuckle and I'm like, it's not going anywhere. I mean,
makes a good story.
There's already enough traction. It makes a good story, and this guy's just doing his job. He's a politician and he's working for his constituents, and that's what he's supposed to do. Is he's supposed to defend the people that he's supposed to be representing.
Well, okay, so talking about your article, you compared Bitfinex to Mt. Gox. So how are those two situations similar?
Yeah, so I think the biggest thing that I can remember, so just as some background, I've been in this industry for about 5 years. I started out, it's been actually 6 years quick, huh? Now. So I was at CoinDesk, and I had used Mt. Gox. I mean, I wasn't like a big user of Mt. Gox. I mean, I was just this was like a hobbyist sort of thing. I was just a cryptocurrency journalist, so it's not like I was, in the big bucks or anything. But the one thing that really reminds me of Mt. Gox, now today we've got a much more complex and nuanced ecosystem than we did back then. You have to consider what we had back then was we had one way to exchange dollars for Bitcoin, and that was Mt. Gox. And then there was like a smattering of different wallets. CoinBase was around, but they weren't like an exchange. They were more like a brokerage. And it was somewhat tedious and expensive to use them at the time. They didn't have an exchange. They didn't create an exchange until after the whole Mt. Gox thing, and it was a good thing that they did. That was kind of a reaction to that. But the issues that were happening with Mt. Gox were slow moving, as they have been for Bitfinex. And these are things that I've been watching for a long time. But one of the big things is that neither entities really had good banking relationships. So Mt. Gox had a Japanese bank account, but it had been reported that the banking authorities there didn't, they were trying to shut that down. Bitfinex went so far as to sue Wells Fargo a while back because they lost their correspondent banking with them. So correspondent banking means that Wells Fargo, they had it in a bank account somewhere else, but Wells Fargo is in charge of taking care of the transmission or the wiring of the transaction. So banking problems are the number one thing. So, and then that trickles down to when you have banking problems and your customers want to withdraw US dollar, that becomes a slow and tedious process. And so I remember Mt. Gox, there was major problems with being able to withdraw USD into a bank account. And Bitfinex is having the same problem where they've had to use several different banks to try to process withdrawals. And they had become so desperate that they used a company called Crypto Capital Corp in Panama to try to process these transactions. And it looks like Crypto Capital Corp ran off with the money, and they didn't say anything about it.
So you think that...
Meaning Bitfinex didn't say that there was this big hole that was missing. And so you can also compare that. It's a little bit of a different situation where Mt. Gox, money began going missing, and no one really talked about it, especially not from the executive team at Mt. Gox. They knew that they were missing, so the amount of money that they were supposed to have in the exchange didn't really equal all of the customer deposits that were there. So the situation is different where Crypto Capital Corp may have ran off with this money, and with Mt. Gox, it may have been hackers. It may have been their own executive team that had taken the money. But the two situations are similar in that the total amount that should be held at Mt. Gox versus the total amount that should be held at Bitfinex is not equal to the actual customer deposits that exist.
So you think,
which is like,
I'm sorry. So you think
that's totally counterintuitive to where we were supposed to be with blockchain and cryptocurrency, with this idea of we were going to be transparent and we weren't going to deal with fractional reserve and things like that, which I find really interesting. Now there's a lot of Bitcoiners that say, hey, now fractional reserve is okay in Bitcoin, even though the whole reason why we all got involved in this is that we could hold our own money and there wouldn't be this fractional reserve. And I would even argue, even if you are holding your own cryptocurrency right now, because we have such systemic problems with fractional reserve on these exchanges that have been hacked or have lost customer funds, the actual cryptocurrency that people hold, whether it's in a hosted or unhosted wallet, is not really worth what they really think it is right now, or even like the true market price.
So, okay, can you elaborate on that? Why is it not worth this price?
Because it's overvalued, because you have a huge systemic risk. You have at least with the $40 million Binance hack, with the $850 million missing from Bitfinex, you have at least a $900 million hole somewhere in this ecosystem. And nobody's been able to explain where that's going to come from. And so you have an overvalued cryptocurrency ecosystem right now. I know the price is going up, but that doesn't really reflect the systemic problems that are actually happening in the market right now.
So you're saying the market cap is missing $900 million?
Well, let's not say the market cap. All I'm saying is that there does seem to be about 900 million missing in cryptocurrency right now that we know of. That's all that I know, right? Yeah. There's probably a lot more out there. Market cap is sort of a number I wouldn't really rely on, because that's coming from all sorts of different exchanges that have the same systemic problems that bigger exchanges like Binance and Bitfinex have.
So you think with Bitfinex, their bank just up and took the money? Is that what you believe?
I don't. Based on court documents from the New York Attorney General, it appears that a firm in Panama named Crypto Capital Corp has absconded with over $850 million of Bitfinex funds, and they say it's held somewhere.
That's crazy. Well,
they say it's held somewhere, seized in banks in Spain, Portugal, and the United States.
Well, like you were saying, so you're comparing them similar because they were missing millions and millions of dollars and didn't say anything for a while. And
yep.
That's one thing I will tip my hat to Binance, is they've been pretty transparent about, their money going missing and coming out and saying basically they're going to cover all the lost funds and their investors, shouldn't take a hit on anything that was stolen.
That's great that they did that. I'm not saying that that's a bad thing.
Yeah.
The one thing that's concerning, though, is that they have shut off deposits and withdrawals to the exchange. Yeah. That's a bit abnormal to do.
Well, in your early days of Mt. Gox, how would you get your money out? How would you cash out your Bitcoin? Or could you even do it?
You could do it. The easiest way would be just to take your Bitcoin and transfer it. And that's what a lot of people would do. Now, what that would do is cause the spread, which means the price between Mt. Gox and other exchanges, there was a big difference in the price. It was like between 5 to 7%.
Yeah.
So Bitcoin on Mt. Gox was more expensive than anywhere else because you couldn't actually cash out. The only thing you could do is send your Bitcoin out. And eventually, once they turned that spigot off, that's when everybody knew that there was a huge problem.
Okay, so you had a playbook for the failing exchange. You want to kind of elaborate on the failing exchange playbook?
So a failing exchange playbook is what I said earlier. An exchange that doesn't. It all starts with an exchange that doesn't have banking relationships. And why don't they have banking relationships? That's because no bank is interested in taking on the compliance risk associated with said exchange. That could be for a number of reasons. That could be because they don't feel the compliance team is strong enough. That could be because the assets on the exchange could be considered or construed as securities. That could be because that the bank doesn't feel like the technology is where it should be for a top-level exchange. So that's where it starts. And then when you don't have banking capabilities, that's when you start having problems with, are you really an exchange? What are you actually exchanging? If you're exchanging cryptocurrency for cryptocurrency, how is that actually being pegged to an actual fiat, something that's stable? In inflation, let's not even, and people will argue that inflation is the bane of fiat or whatever, but I would say that inflation is actually good at a lower level, not like in a Venezuela type inflation, but the U.S. dollar has done very well on inflation, and actually inflation's been quite controlled in this good economy. So the idea that you're running a crypto to crypto exchange solely because of fiat inflation, particularly on the U.S. dollar, doesn't really make a lot of sense. So when you've got a non-banked exchange doing only crypto to crypto transactions, and then you find out that the amount of crypto that is actually on the exchange is not matching what customer deposits are, and is not properly audited, and then you start seeing, we're going to start slowing down withdrawals, or people are going to have deposit problems. It's usually not deposit problems, right? It's usually withdrawal problems.
They don't mind taking your money.
Because they don't mind taking as much of your crypto as you want to give them. But when you start seeing withdrawal problems, and this is usually the ability to get any sort of value out. If an exchange is having banking problems, obviously they're going to have issues with wiring to your bank account. But then, like, the deeper issues, like when they start really shutting down with any sort of withdrawals, which is what's happening with Binance right now. I don't think we have all the answers on Binance, and I don't want to get too deep into it. But it is a little concerning that they decided that they wanted to shut down all withdrawals and deposits for a week. And so we'll see where that all turns out.
So is that kind of a big fear because you think they may not be liquid? Or, I mean, you may not think it, but just, people need to watch out because they may not be able to have enough funds to back what investors have put into their accounts?
I don't have all the answers, and so this is tough. But for a $40 million hack, these guys are so concerned of a run on the bank that they shut down both deposits and withdrawals. They lock everybody's funds up for a week. What's the process and procedure here? Where is this coming from? Like, this just seems like an arbitrary decision. Why do it for a week? Why not do it for 3 days? Why not do it for 2 weeks? So basically, one of the biggest exchanges in the cryptocurrency industry is just deciding to make its own rules and do whatever it wants to and take all of these risks. And apparently funds are safe, but if they're so safe, why can't I take my money out? Why is Binance the only one able to move crypto in and out of its own exchange right now?
Yeah, that's a good point. I think a lot of people are kind of just passing that over.
They are because a lot of people use Binance and a lot of people trust that exchange. And I can tell you, I've never used Binance. My firm has never traded on Binance, and it's because there's too much risk there.
Yeah, I think people, they put just so much trust in these exchanges. And I know when I first got into crypto several years ago, when I started looking at exchanges, I was kind of duped because I thought it was, these big companies, that have all these compliance in place. And I was really shocked to realize that a lot of exchanges are probably just a guy in his laptop, in his garage or in his basement running a multi-million-dollar exchange, and that shocked the hell out of me. And it's crazy how much trust people put into it and don't even realize that at any moment their funds, could be lost.
I don't want to always be construed as like this negative and bearish person. So like a great example of a good turnaround of one of these, just like what you're talking about, is Poloniex. Okay, so Poloniex was started by a couple of guys many, many years ago, and they're like, yeah, let's just start a cryptocurrency exchange. And it took off, and it did really well, and they were making a lot of money, and these guys were like, wow, like this is really becoming like a big thing. Maybe we're not like the right people to be running this though. Maybe like, somebody else needs to come in and they could do a better job, with, professional management. We're just not the people, we started this thing, but like, we're not like CEOs or executives. We don't know enough about finance to do this. And so they ultimately were sold to Circle, and now Circle runs Poloniex, and Circle is doing a great job in, getting that exchange up and running with banking, compliance. I think Poloniex has a lot of potential to be like a big exchange that will do initial exchange offerings, provide, security, digital asset security trading. Circle owns Seed Invest now, which is a crowdfunding platform. So someone could conceivably go on Seed Invest, get some investors for a project, then eventually do an IEO on Poloniex. I think that's sort of the vision for what Circle is going to do. Hopefully I didn't just give away their whole playbook there, but that's what I'm hoping, because for my firm, what we do is we're active traders in the market. We run a fund. It's a market neutral fund, so we're trading on behalf of our own investors, and what we want to see is a fully regulated market. We're really excited about the idea of trading more digital assets than we do right now. We really only focus on Bitcoin and Ethereum on very good exchanges. And so what we want and what we'd like to see is better exchanges, liquid exchanges, and full compliance, because we have investors, and we have a duty to our investors to make sure that we're not taking those funds and putting them in places where you would see something like counterparty risk. Counterparty risk is what you see on something like Binance or Bitfinex, where.
Yeah, I agree with you. I'm pro regulation. Like I said earlier, I don't want to just be completely, swamped with regulators, but to get big time investors in it, to get the average person to start investing in crypto, they need to have some reliability and trust that their funds are going to be safe. And exchange hack every single month, I think, is really pushing that off on people from jumping into the crypto game.
Precisely.
So what is some of your favorite exchanges?
Yeah, so there are some great exchanges out there in the U.S. I think CoinBase has done a really great job. Like I said, it kind of came out. This would be surprising to a lot of newer folks, but it really came out of nowhere that they decided to launch an exchange. And when they did, it was really good. The execution was great. You could tell that they spent a lot of time thinking about how to build a really good exchange after Mt. Gox. Another good exchange in Europe is Bitstamp. They've been around for a long time, and they were sold to a bigger corporation. I believe it's a South Korean company, a financial company. The same team though still runs it, and they've got some great investors, and it's a good institutional exchange to use. I'm also particular now about ItBit. I think that they're a great New York regulated exchange, and I think that they're doing a good job. We're more of like institutional advanced traders, so we use some more advanced instruments. So we also use the CME for Bitcoin futures to sort of hedge out our risk on pricing. That's a little bit more advanced than what normal traders would probably use. But I would say, Coinbase, ItBit, Bitstamp, anything that's gotten, licensing from New York is going to be around and is legit.
Yeah, Coinbase is probably the number one exchange I use, and I've been a big fan of it ever since I started using it. I know some people, I think it was a year ago or about 2 years ago, they were starting to do some stuff that piss people off, and I just tell them, guys, Coinbase so far is one of the only few exchanges that hasn't been hacked, and probably one of the most trustworthy exchanges that is out there in the market right now.
They're always going to get scrutiny. I mean, I hate to say this, but they're really like they're the Microsoft of cryptocurrency, and I don't know if you remember back in like the 90s, there was all this like, open source versus closed source, and like, screw Microsoft and all this stuff. But look at what happened to Microsoft though. So now they support open source. They've really become a different company than they were under different management. And I think Coinbase is trying to do their best to adopt open source and be a bastion of light in the industry. They do favor centralization in some places, like their exchange, but that's just the regulatory game that they have to play. They are trying to push the envelope, but they're pushing the envelope while still being like, hey, SEC, is this like something we should do? And so they're going to get a lot of flack for it, but they're also innovative in a number of different ways that I think a lot of people don't even see.
Yeah, I definitely agree with that. I mean, the last thing you want as an exchange is have the SEC come after you and start, suing you because you're not compliant, and that's horrible for the people who have their money on the exchange. So, I'm a big fan of Coinbase, and like you said, anytime you're doing something right and you're getting popular, your business is growing, people are going to hate on you.
Precisely.
So, people were hating on them. I kind of laughed at them, and those are probably the same guys who got their funds stolen on some crappy exchange out there that has no compliance in place or anything like that.
Nobody ever wants to talk about that, do they? And especially unregulated exchanges.
Well, I still got you. What's your thoughts on the current state of the market? Where do you think it's headed? We going up, down? Just Bitcoin going to moon, or I guess I hate saying the word moon, but Bitcoin going to rise? What do you think?
Well, it's been a really fascinating last couple of weeks, because when the New York AG came out with its news about Bitfinex and the missing $850 million, we saw a $500 drop almost immediately in Bitcoin. But since then, we've seen like a steady rise, and I think a lot of that is cryptocurrency is a really interesting market where you've got a lot of traders out there. They've got a wad of, I don't know, tens of thousands to hundreds of thousands, of a bankroll that they're trading with, and it's clear that they don't like this government news, and as a result, they're buying. They're seeing this as a positive in some way. The only problem I see with that is, as we're kind of like approaching past 6,000 to 7,000, is there's still a lot of systemic risk out there. And I would encourage people to go read my recent CoinDesk article that came out today, in that, I think we're still going to see some really negative news that comes out. We still really haven't gotten clarity on what's really happening with Bitfinex and Tether and Binance. And I think over the next couple of weeks, we are. One factor that plays into the price right now is that next week is Consensus and Blockchain Week, and historically price movements are up when these kind of conferences happen, because you get a lot of new folks that come in, they hear about all the exciting things that are happening. There'll be a lot of positive press releases next week, so I wouldn't be surprised if the price continues to go up. If there's anything I can tell you about price indicators, things like big conferences make the price go up. Anything positive about Bitcoin acceptance from institutions or payments or anything like that makes it go up. The things that make Bitcoin go down are scams, thefts, and bad regulatory news. And so those are sort of indicators that you'll see over the next couple of weeks. I think it's a really fascinating time to be watching this stuff, though. I did not expect the price to behave like this. I wasn't completely surprised, but this march to 7,000 is really fascinating. And only time can tell where the price is really going to go. I'm not really like a predictor of the future, but I'm bullish short term, I would say, but bearish over the next few months, I would say.
Yeah, it surprised me too, because I saw Binance got hacked for 7,000 Bitcoin. I immediately thought the price was just going to plummet, especially how reactive crypto investors are to news, and just to kind of see it keep climbing and climbing. Then of course, with the Congress coming out yesterday and, saying that he would like to ban cryptos. And it's just keeps going up. So it has been interesting to me because I thought the exact same thing. All right, this is going to bring the price of Bitcoin down a little bit, and it's just been the complete opposite.
It's really a testament to the strength of the community now and how many more entrants there have been since Mt. Gox. But sell-side pressure is still strong. And I will say, like, in this industry, it doesn't take much for the price to go up, but also it doesn't take much for the price to go really down. From my experience.
Yeah, you've got to be able to stomach the volatility.
Precisely.
Which I like it. I think it's exciting. I got my safe investments. I got a retirement account, but having some money in something that can swing either way, it's fun to watch, and it's definitely.
Of course, that's why we're here, right?
Well, right. Are there any projects that kind of flying under the radar that you like at the moment?
Projects that are flying under the radar. So I am writing a book for O'Reilly. I'm writing with a co-author, Mastering Blockchain. That'll be out next summer. So one of the things that we're looking at is interesting projects. I think that there's going to be a lot of more blockchain-specific type of decentralization projects that are going to come along. I'm looking at everything, and I don't want to name any names right now because nothing's really launched. But other than cryptocurrency, I think that there are some really interesting projects that are going to come along that are going to offer decentralized tech, privacy tech. I'm interested in blockchain analytics. I'm interested in staking. I think staking is something that it's going to be an interesting experiment. What else? And there's just a lot going on in this market. I think new custody ideas and concepts to come along that'll help people protect their keys better is interesting. Anything that has to do with mobile and encryption on mobile is interesting. I think that I don't want to name any names because I name a name and then they say they're going to launch and then they don't launch, and so then I look like an idiot because they didn't launch, and it's not my fault that they didn't launch. So,
What? So you're a believer that blockchain will be used in multiple different types of industries, not just financial?
Well, finance is the big one, and I know a lot of people are skeptical for the other use cases, and I am just as much as well too. But all it takes is just one thing to just blow everybody out of the water. And I can't imagine that won't happen.
Well, what's your thoughts on Ethereum? Because I think they're about to have some sort of blockchain products launched on Amazon Web Services. And they're switching to proof of stake.
Ethereum is interesting. So Ethereum was the logical evolution of where Bitcoin was, because Bitcoin is Bitcoin. It's a store of value. It's only really like something you can script on. Whereas Ethereum was like this boil the ocean idea of like trying to do everything. Like, let's try to do everything and figure out what people want to use it for. And so like when Ethereum came along and it was launched, it was like, okay, it's kind of sitting there, like smart contracts, that's interesting. Oh, it's got a faster blockchain. That's kind of cool. But then what happened? It became the platform for ICOs. That's really what it became. Mm-hmm. And now it's not the platform for ICOs because that's not a thing that people are doing anymore. Now they're trying to move it to this more scalable, flexible system. They're trying to sort of replace the jet engines while in mid-flight, which I think is an interesting experiment. But let's think about the reality. Like, why wouldn't someone just come along and make something that is from scratch, that's more scalable, more flexible, maybe a more capable smart contract language that isn't as decentralized or is more decentralized? Like, there's a lot of things that people could take the ideas of Ethereum and create something totally new, just like how, Bitcoin was sitting there and then somebody was like, oh, well, let's just create Mastercoin, and then let's just create Ethereum, or, let's try all these different things. So all of this is just very much a lot of research and development. This is kind of why financial institutions are kind of sitting back and looking at this stuff, and just, kind of keeping their hands off. But it's very exciting, everything. Like even, the financial side of it's interesting. The technical side of it's interesting, and what the use cases are going to be in 10 years, I think I couldn't even predict.
Yeah, I mean, I definitely love it. I think it's something awesome and something to always keep us interested. Well, so what are y'all doing at Pactum Capital? What are y'all building? And if you want to discuss on that.
So we are active traders in the market. We're market neutral. So basically what we're trying to do is just capture value from the volatility, or what we like to call inefficiencies in the market. You've got sort of this Wild West scenario out there in cryptocurrencies, and I don't expect that to change anytime soon. And so we're just kind of building systems and trading and execution technology and strategies to capture that value. And as a result of doing that, what we're doing is we're actually making prices less volatile by doing so. We have some interesting trading technology that we've built. We've brought in some really talented cryptocurrency engineers to work with us. And one of the technologies that we're using, actually, we're planning on open sourcing fairly soon. So you'll probably see some news about that in the near future, or by the time this podcast has already come out.
Well, hell yeah, man. Well, is there anything else you want to talk about before we get out of here?
Wow, I mean, I think that was a lot. That's going to be a lot for a listener to unpack. I'm sure I'm going to get, if you want to come at me at Daniel Cawrey on Twitter and tell me how crappy I am, or how spineless I am, I'm pretty used to that. So I was a cryptocurrency journalist for many years, so I can handle it.
Oh, I mean, I definitely learned a lot, and I think anybody that's going to listen to this is going to learn something. And at the end of the day, that's what it's about. Whether you agree, disagree, the more information you have, the more better your decisions will be. And so, come find us on Twitter. Don't cuss at us. Don't say, F you. But I hope everyone enjoyed listening to it. I will post both your articles in the description. So if y'all want to read his articles, I definitely encourage you to, because they are great. I think a lot of people put too much trust in exchanges, and I think opening the eyes to the average investor that, okay, crypto exchanges aren't what everything people, expect them to be, and there's a lot of security flaws, and, holding on to your own cryptos is probably the safest way, and probably not the only way, but one of the best ways to prevent it from getting hacked or getting your coins.
I agree with all that.
Well, hey, man, you'll be in Consensus next week, so if y'all are going, make sure you check this out. You said you're speaking twice?
So I'm going to be on CoinDesk Live, which is their live stream Tuesday morning, okay. And then I am speaking at another conference at the New York Civic Center. I believe that's Tuesday night. I can't remember the name of the conference. God, they're going to hate me for saying that. But it's at the New York Civic Center that night. I'm talking about investment stuff. I'm probably going to repeat a lot of the stuff I just said here, so if you want to see me in person, that's where I'll be.
Hell yeah, man. Well, Daniel, I appreciate you coming on.
Yeah, no problem. Thanks for having me.